folks, we're in the second week of January, diving down into my $260,000 dividend stock portfolio, which going into February, we are going to experience some dividend cuts, bringing down my total annual dividend income to just below $8,000. We're going to get into the trades, the stocks I bought and sold, including the money I am leveraging from the bank, and getting into those individual accounts. So in the clarity of my transparency, as always, do the channel a favor, hit that like button, and let's get right into this. Welcome back, passive income investors. Now, before we dive down into this video, get into the portfolios and the trades, guys, I just wanted to shout out that I'm doing a new challenge this year. At the end of every month, I'm going to document my income and expenses on a spreadsheet that I put together right here. And I challenge you guys to do the same, with the goal at the end of every month of saving as much money as possible after your expenses to invest in the market. And if you want to support this channel, you can head on over to the chartmaster.com, guys. Get the spreadsheet that I'm currently using, plus the finance tracker. All of these get included if you purchase just one of them, and then you can follow along at the end of every month. And I'm going to specify these videos in a new playlist that you're going to find on this channel. And getting right into this, folks, I made a video yesterday really over exaggerating the exuberance of how the market feels right now. The fact that you could throw money at almost any dip and make a really quick 10 or 20% return. It is the easiest market, in my opinion, to make money in. And don't take my over exaggerations in this YouTube entertainment channel, which, by the way, is not financial advice, is some kind of like set in stone way to investing. But I did do a trade on NGA, which I'll touch base on because I did sell out of it literally today. But going over my portfolio values first and just taking a look at my sector allocation, guys, since I leveraged money from the bank into BABA, which we will look at, my information and technology, where I basket that, is trading up about 25% now in the weighting, pretty large percentage of the portfolio. And then my real conviction is in the healthcare space, where currently 19% of my overall portfolio sits. And these is really high risk healthcare. I mean, I think I've only got maybe not even half of that percentage weighting sitting in Johnson & Johnson, with the rest being MindMed and, of course, ARCG, which I actually bought more of today. And we'll touch base on all the individual plays in a second here, guys. The other conviction I have right now is I'm going to be taking a lot of my dividend income and kind of converting it over into some more REITs, some more banks. I'm going to be continuing to buy Stag Industrial. I'm going to continue to be buying TD stock because, like Pokemon cards, when it comes to banks, I'm trying to collect them all here, folks. But let's come back to this in a second, and I'll show you the individual holding weightings. But first of all, let's talk about some of the trades, and then we'll get into the accounts. NGA, guys, the bus electric vehicle maker, the Class 8 truck maker. A lot of people are in this for the long game. With these special purpose acquisition companies that are pre-merger, I'm always a little speculative on what happens after the merger because they usually dilute the living hell out of shareholders. We saw it with Hyliion. I don't know if the conviction is going to be different toward this, but I told you guys you could throw money at any of these, make a really quick return. And to kind of prove that out, I actually bought it at all-time highs at like $29, and I sold it today for right around 34 bucks a share, making just over a 10% gain. Like I said, my conviction really isn't toward buying into some of these electric vehicle spaces right now because I still feel like there's a bit of a bubble and an over-exacerbation going on. But I took those gains, which wasn't much. I mean, I only threw about $1,000 US at it. I made just over $100. I took all of that along with some of my own money, re-added it to the portfolio, and dumped it all into ARCG, at which I overpaid for ARCG. I always feel like I'm overpaying for ARCG because it sits right around 109. I think I ended up paying like 110 or 11 or something for it literally this morning, scaling that position up to about a $5,000 US position in total. And I keep telling you guys, I feel like the healthcare sector over the next 5 years is going to start outpacing FANG stocks if what we hear is true, when we're talking about the cures for cancer, when we're talking about MindMed curing depression, opioid addictions, and things of that nature. My conviction has yet to change. So I feel like I'm very nicely diversified now when it comes to the healthcare space. I'm really over convicted to the higher risk plays in this sector, but I feel like it's very appropriate for where I see the world heading here, folks. Now let's talk about BABA stock. This is the stock that I have been leveraging $10,000 from the bank. It's the most I've ever leveraged into an individual holding because I was so convicted on this dip that it's just been absurd, guys. And taking a look at the last 5 days, it is trading up beautifully, 6.39%. And going into the actual account where I hold those funds, I'm currently sitting up again, right at the 5.8. I'm sitting up $550, which in this entire position right here is all the bank's money. It is not not margin, it's line of credit. Big difference, guys. You can get margin calls. Your interest rate's usually a lot lower on margin, but there's other assumed risks. The interest from my line of credit being exposed to the risk of what they call floating interest rates, which primarily means at any point in time, those interest rates could go up. But at a 4.9% interest rate, I'm really not complaining, as I've already made back enough money if I sold it right now to pay off the entire year's interest. But I'm honestly convicted that this is going to shoot back up to, like, you know, a $300 stock. I'll make a quick 20 or 30% gain. So I'm going to be patient with this as we head into earnings season, and we'll just pay attention closely to it. And taking a look at my other BABA position in my RRSP account, which I have some room to contribute to my RRSP, guys. And like I told you, this entire account was pretty much put together from Tesla. The entire account being worth about 46,000 CAD, like $30,000 plus of this all Tesla gains, which is incredible, guys. And we're up on BABA at 6.56%. Got a bit of a better deal on my BABA shares here, but just to give you guys a quick overview. Now, finally, like I said, I am still convicted to be buying my Pokemon cards, those banks, Stag Industrial, and just taking a look at the dividend income I am going to be receiving. We got every Canadian company paying out this month. All my Canadian banks, BNS, Canadian Imperial Bank, TD, RioCan, Northland Power, all going to be chunking out huge amounts of dividends this month. We had MO, one of my Sin stocks, pumping out some dividends here, guys. But overall, the portfolio is remaining relatively flat. The 260,000, it looks like it blew up a lot, but keep in mind 9,500, around 10,000. Roughly leverage from the bank. I am sitting on a much higher cash position. Right now it's about 8,200, but I got a lot of their checks coming in, so it'll be closer to between 9,000 and 10,000. And the reason for my cash weighting going up is I'm going to have to be paying some taxes. Tax season's coming up here, guys. I'm going to say I owe maybe somewhere between 6,000 and 8,000, and after I pay the accountant, say goodbye to most of that. So that'll bring the entire portfolio weighting down, plus when I pay the bank back from whatever I end up making on BABA, if I make something. Again, taking on a lot of assumed risk here, folks. But in overall, that would give the portfolio evaluation. It'd still be around $245,000. Still trying to keep over that $250,000 mark. But we can only pan this out and play it month by month here, folks. But taking a look at the 19 positions I now currently hold in this portfolio, all completely evened out for today, guys. I wrote down all the numbers exactly so you can take a look and examine this. Pause the screen if you would so like. I talked about this in another video in the past. My top 3 weighted holdings right now, each one of these make up about 10% of the portfolio, or 30% combined. Of course, MindMed, we've got RioCan, and then of course we have Northland Power, which makes me feel really good because they're all in completely different sectors of the market, so I don't feel overexposed in any major way. Though at some point, as I mention all the time, if these things really get that much bigger, I will be kind of forced to scale them down, because anything over a 10% weighting starts getting me uncomfortable for my risk tolerance level. But everything overall, guys, really nicely balanced out. Everything going into a nice equal weighting here. Constantly looking for new positions to add, but for the time being, my real conviction is going to be toward TD and Stag until I get them to full scale, at which TD is getting there. TD is sitting at about 6,000. I usually try and get my banks between 10 to 12,000, and then I'll probably look to add one more, whether that's going to be Royal Bank or BMO. And a lot of people said, well, why aren't you buying the US banks? And as I told you guys, I got to pay foreign withholding tax. The Canadian banks pay a much higher yield already, at which I don't pay any tax on those dividends. And then on top of that, the Canadian economy is one of the fastest growing first world nations. I've told you guys this many of times. And if you want US exposure, you can buy TD. It operates in the US pretty heavily. So that way you get a Canadian bank with US exposure with a much higher dividend yield than usually you're going to get from something like your Bank of America's of the world. And the overall portfolio allocation for my banks right now is only about 31,000 total, or 12% of the total asset allocation. So I feel like there's still room to scale that, as obviously, you know, as I add all these other positions as well, the diversification will continue to balance itself out. But in light of this, I pass the question off to you guys. I would love to know what you think in that comment section below. A lot of people are saying, oh, you're becoming a swing trader, a day trader, and kind of really, yes, guys, I told you, this is a trader's market. This is the easiest market in the world to make money in. And again, I know I over exaggerate to make entertainment for this YouTube channel. So these dip buys, I don't know, maybe it's just because I'm getting a lot more comfortable with my risk tolerance. I really don't know. But if you want to continue the conversation, come over to the Passive Income Educator, where myself and the 7-figure mind of Matt Money combined, we're managing over $1 million in the market. We do live streams every Friday at 10 p.m. You can join us there as well. But stay cool, stay awesome, and I look forward to catching you guys tomorrow.